Do you know how important your credit score is? Let's dive in. Your credit score, in essence, is a reflection of your financial health. It's like a report card, but instead of grading your academic performance, it assesses your financial responsibility. Think of it this way. When you apply for a loan or a credit card, lenders look at your credit score to determine how risky it would be to lend you money. A high score signals to them that you're a reliable borrower, and this could lead to lower interest rates for you. But the influence of your credit score doesn't stop there. Sometimes employers check credit scores to get a sense of a potential employee's financial reliability. It could affect your ability to rent a home or even your insurance premiums. So, it's clear that your credit score holds a lot of power over your financial life. But what exactly is a credit score, and how is it calculated? Well, think of a credit score as a kind of financial report card, a numerical representation of your creditworthiness. This score is not drawn out of thin air. It's based on several key factors. Firstly, your payment history, which looks at whether you've been consistent with your payments. This is the most impactful element, so make sure those bills are paid on time. Next up is the amount of debt you have. Lenders want to see that you can handle borrowing money and paying it back. Then there's the length of your credit history. A longer history can be beneficial because it gives lenders more information about your long-term financial behavior. The types of credit you have also play a role, as well as new credit inquiries, which can indicate whether you're suddenly in need of a lot of credit. In essence, your credit score is a reflection of how well you manage your financial obligations. Now that we understand what a credit score is, what are the key factors that influence it? Let's dive in. First up, we have payment history. This is arguably the most important factor. It's all about whether you pay your bills on time, every time. Late or missed payments can really dent your score. Next, we have credit utilization. This is the percentage of your total available credit that you're currently using. Lower is better here, so try to keep your balance well below your credit limit. Third, we have the length of your credit history. Older accounts show you have experience handling credit, which can boost your score. Next up is credit mix. Lenders like to see a variety of credit types under your name. This could include credit cards, student loans, mortgages, and more. Lastly, we have new credit inquiries. Applying for a lot of new credit in a short period of time can lower your score. Keep in mind, these factors are intertwined and affecting one can often impact the others. So, how do you ensure you maintain a healthy credit profile? Let's delve into some practical steps you can take to keep that credit score shimmering. First up, make payments on time. This might seem obvious, but you'd be surprised how many people let this slip. Whether it's a credit card bill, a mortgage payment, or a car loan, punctuality is paramount. Late payments can knock points off your credit score faster than you can say overdue. So, set reminders, use automatic payments, do whatever it takes to ensure you're not missing deadlines. Next, keep your credit balances low. This is all about your credit utilization ratio. That's the percentage of your available credit that you're actually using. Aim to keep this below 30%. So, if your combined credit limits total $10,000, try not to owe more than $3,000 at any given time. Now here's a tip that might seem counterintuitive. Don't close old credit cards. Even if you're no longer using them, these cards contribute to your overall credit history length, which is a factor in your credit score. So keep them open, but be sure not to max them out. Lastly, be cautious about opening new credit lines. While it's true that diversification can be good for your credit score, it's a delicate balancing act. Too many new accounts in a short time can be a red flag to lenders. Remember, consistency is key when it comes to maintaining a healthy credit score. So, keep these tips in mind and you're well on your way to a sterling credit profile. So, there you have it. A comprehensive guide to mastering your credit score. We've dissected the significance of credit scores, simplified the variables that sway them, and handed you some effective tactics to uphold a robust credit profile. It's all about nurturing your financial passport, making it as strong as possible for the journey ahead. If you found this video helpful, don't forget to like, share, and subscribe to Wise Wallet Wisdom for more financial wisdom. And remember, your credit score is your financial passport. Keep it in good shape.